ये गेम कंपाउंडिंग का है, राइट? वेल्थ क्रिएशन इज अबाउट मल्टी डिकेडल इन्वेस्टिंग, and if you are invested for decades is when you can make immense wealth. So we are in an era right now where average holding periods are 3-4 years, but collectively all of us are making this effort of telling investors कि आप 10, 20, 30, 40 साल के लिए इन्वेस्ट कीजिए.
And it's so important for investors to have their expectations right. See, again, pain market के performance से ज़्यादा अपनी expectations की वजह से आता है.
True.
Because I entered into equity thinking कि my friend who had entered last year has made 30%, 40%, 50%, then I should also make 50%. It doesn't happen that way.
True. The best way to do that is ownership of companies. So either you run your own business, but 99% businesses don't succeed. And the ones who succeed are already in the stock market. So then partner with them. What is a cost efficient way of partnering? Mutual fund. What is a tax efficient way? Mutual fund. What is a transparent way? Mutual fund. What is a safer way? Thanks to the tightening of regulations over the last decade or so, this has been one of the most credible vehicle for allowing partnership with businesses.
Hi friends, welcome to another episode of Kotak Insights. Today we have my dear friend Kalpen Parekh, MD CEO of DSP Mutual Fund. Kalpen bhai, how are you?
All good, thank you so much.
So I must tell you why this discussion is happening. So Kalpen bhai tweeted, he's a big tweeter. I follow him quite regularly, and I did the mistake of liking his tweet. And the next day he sent 10 of his people to my office saying कि अभी तो Kotak is liking the product and Kotak should start distributing the product. So this is how this conversation started. So I said that decision of to distribute or not to distribute I can't influence, but I can definitely come and meet you to talk about this product.
So thanks Rohit for firstly inviting me. तुम भाई भी बोल रहे हो, friend भी बोल रहे हो, और फिर इतने लंबे formal titles तुमने जोड़ दिए. But actually for me, I've known you for almost 10-15 years, and you are a very astute investor yourself.
Thank you.
And unlike the traditional way of investing, you generally don't look at past returns, you look at where are the odds of future returns. So when you like something, and it doesn't matter what DSP का tweet हो या मेरा हो, but you will not like what you don't believe in. So I felt that the exact thought when we designed this product, and I don't want to start this conversation by selling a fund or something.
No, it's not.
But the whole idea, when we always keep thinking that in this business of investing, our human brains are wired to constantly look at past returns, जो हमें मिलते नहीं है कभी. वो किसी ने पास्ट में जिसने डाला है उसके रिटर्न है. हमें लगता है कि वो हमारे है, और वो पास्ट रिटर्न हर आदमी वेबसाइट पे जाके टॉप 3 फंड्स देख के पैसा लगाता है. साइकिल चेंज होती है, एक्सपीरियंस खराब होता है, बोलता है म्यूचुअल फंड अच्छा नहीं है, जबकि म्यूचुअल फंड तो सही है. तो फॉर्मूला ये है कि कहाँ पे आगे रिटर्न आने के चांसेस ज़्यादा है या आगे बेटर आउटकम आ सकता है. तो हर समय हम जब कोई नया फंड लॉन्च करते हैं तो 3 सवाल पूछते हैं. क्या ये फंड अलग है वर्सेस व्हाट वी हैव? इफ़ यस, देन वन स्टेप अहेड. क्या इसमें हम हमारा पैसा लगा सकते हैं एज अ कंपनी और एज इंडिविजुअल्स? और क्या ये साइकिल के लो पे है? बिकॉज मार्केट मीन रिवर्टिंग मशीन है. तो ये सोच से हमने जब डेटा देखा कि पिछले 1 साल में अगर सबसे बड़ा जो वेव आया है मार्केट में वो है स्मॉल कैप, माइक्रो कैप और मिड कैप सेगमेंट में. तो अगर हम निफ्टी 500 का यूनिवर्स देखें तो स्टॉक नंबर 1 to 10 ने 17% का रिटर्न दिया है, विच इज़ अ वेरी गुड रिटर्न. लॉन्ग टर्म रिटर्न इक्विटी का तो सिर्फ 12% है, यहाँ 17% मिला है. बट स्टॉक नंबर 11 to 500, द बैलेंस 490 स्टॉक्स हैव डिलीवर्ड 3 times more than 17, which is 51% return. And relatively, the operating matrix of the top 10 companies is the strongest compared to the next 490 companies. तो ये एक पहला पॉइंट था कि साइकिल में एक जगह पे बाजार इसको इग्नोर करना शुरू कर रहा है, और दूसरी जगह पे द बैलेंस 490 स्टॉक्स, और एज यू गो डीपर इन स्मॉल एंड मिड कैप्स दे आर फाइंडिंग मोर फेवर. So our whole idea is be counter-cyclical, be conservative, be cautious. So what we have done is we have said that there are many indices in the market. The most flagship index of India is Nifty or Sensex. These are the 2 largest flagship index. Sensex is 30 stocks, Nifty is 50 stocks. And they generally cover a wide range of all sectors and companies and businesses. And these are all leadership companies. So कोई भी company को जब इतने सालों के बाद जब वो पहले 30 कंपनीज में आता है या कोई भी कंपनी पहले 50 में आती है, इट मीन्स उन्होंने कुछ सही किया है. इट्स नॉट ईजी टू राइज फ्रॉम 5,000 स्टॉक्स टू बी इन द टॉप. We thought, keeping in mind the environment and opportunity, the largest 10 stocks of India are today not being favored.
Largest 10 stocks by market cap.
By market cap.
Okay.
And the largest 10 stocks of Nifty.
Okay.
They are slightly out of flavor right now. And a lot of attention is in other themes, hot sectors, small caps, mid caps, which are flying, which are giving 50, 60, 100, 200, 300% sort of returns. And these largest 10 stocks are basically, 4 banks. Banks as a sector for last 4-5 years, in spite of massive cleanup in their operating matrix, have seen significant valuation correction and deservingly. 5 साल पहले महंगा था, तो धीरे-धीरे normalize हुआ है.
As you said, mean reversion.
Mean reversion. सस्ता कुछ भी नहीं है, पूरे मार्केट में सस्ता कुछ भी नहीं है, but relatively fair price पे आ रहा है. So 4 स्टॉक इसमें बैंक से है, तो 40% वो हो गया. फिर 2 स्टॉक इसमें कंज्यूमर स्टॉक्स है. अब कंज्यूमर स्टॉक्स भी पिछले 2-3 साल से कंसोलिडेट हुए हैं. वहाँ पे भी मीन रिवर्जन का प्रोसेस शुरू हुआ है पिछले 3 साल से. 3-4 साल पहले सब कंज्यूमर स्टॉक्स महंगे हो गए थे क्वालिटी के नाम पे, तो वो क्वालिटी भी अब नॉर्मलाइज हो रहा है. तो क्वालिटी अच्छी है बट वैल्यूएशन नॉर्मलाइज हो रहा है. 2 स्टॉक है एनर्जी और कैपिटल गुड इंफ्रास्ट्रक्चर स्पेस में. दे हैव पार्टिसिपेटेड लाइक द मार्केट एंड
IT होगा फिर.
तो एंड 2 स्टॉक है आईटी के. आईटी भी अगेन मॉडरेटली, मतलब ना उसने हाई फ्लाइंग रिटर्न दिया है, ग्रोथ भी स्टेडी है. सो दीज आर द 10 लार्जेस्ट कंपनीज बाय मार्केट कैप. एंड इफ यू लुक एट लास्ट 10 year डेटा, दिस पोर्टफोलियो डज नॉट शिफ्ट ऑफन बिकॉज इट्स डिफिकल्ट टू डिस्प्लेस द लीडर्स. And when you look at the roughly 20-year history, of course, history does not always repeat, but it gives you some signals. Over 20 years, which is 2 decades and 4-5 market cycles, economic cycles, these 10 stocks have delivered better returns than Nifty 500.
Okay.
And even better returns than Nifty. And in the last 5 years, they've underperformed. So generally, there is something solid about the strength of the largest businesses, which are right now, from a stock market point of view, underperforming. We have always seen that the best time to invest in a certain asset class or a company or a sector or a fund is when it is a solid, universe of companies, but going through a down cycle or going through a poor performance cycle. And I think that is what we are putting together. So this is a portfolio of the largest 10 market cap stocks. हमने इसके लिए NSE के साथ एक index design किया. The other interesting point here is that we have given 10% equal weight to each stock. Normally Nifty के पहले 10 stock के weights अलग-अलग होते हैं मार्केट कैप और फ्री फ्लोट के हिसाब से. इसमें हमने बोला कि अगर अच्छी कंपनी है तो सबको 10% दे दो. बिकॉज इक्वल वेट itself as a strategy generally over 20, 30, 50 years globally is a source of extra returns of 1 to 2%. So this is an index called Nifty Top 10 Equal Weight Index. इसके ऊपर हमने इंडेक्स और ETF ये 2 प्रोडक्ट्स पिछले हफ्ते लॉन्च किया और आज से इसकी शुरुआत हुई है.
Okay. You are saying that a large cap bias in today's market may be slightly favorable going in the future because small and mid caps have done so well. Maybe people can take some money off the table. You've made good returns if you invested right. So that makes sense. That is our house view also. We also prefer large caps over small and mid caps. But I have a couple of questions here. If I have to play the large cap story, I can play Nifty.
Yes.
So why not Nifty and why a new index or a new fund?
Absolutely. And we also have a Nifty fund on Kotak Cherry. You can explore that as well. This is in a way partly tactical from a timing point of view because even over Nifty, so Nifty ने भी पिछले एक साल में 26-27% रिटर्न दिया है.
Achha, so these guys have underperformed
Nifty also.
Nifty. Okay.
So like I said, the first 10 stocks have underperformed the next 10, the next 40, the next 90, the next 490. Because the first 10 have the largest banks, the largest consumer companies of India, and the largest tech companies of India, companies. And these 3 pools, because they partly have higher ROEs, they were expensive 5 years back. They are going through a meaningful price consolidation.
Has happened.
Their businesses continue to grow at their regular growth rates.
So in some sense, you are saying that play large caps, but why
Within
stop
that.
at playing large caps? Do a concentrated large cap strategy.
Yes.
So this is a concentrated 10
Absolutely.
stock large
10
cap
stock
strategy. Okay, makes sense.
Secondly, many investors, generally they like simple large names because they have the comfort. These are known companies. They are companies in every lane and street, some of the banks. So we know them. So many investors also go and buy these stocks directly. Another advantage of putting this together in a fund structure is that it is tax efficient. So, you know, if at all every time you want to rebalance, the rebalancing in a fund structure is tax free.
Yeah.
Number two, if you buy these stocks directly and you earn roughly 2-2.5% of dividend yield on them, on that dividend again you have to pay your marginal tax. In a fund route, that also becomes tax efficient.
Yeah.
So that's another advantage. It has convenience. So you're right that honestly, if you buy a large cap Nifty or a sensible large cap fund, also maybe over a long period of time, it might give very similar returns to Nifty 10. But from a timing perspective, this is a simple, compact 10 stock index, easy to understand, easy to look and feel, and is at a significant gap from the rest of the market. और दूसरा, normally as investors or consumers, हमें hot funds अच्छे लगते हैं, but ये cool fund है, because ये चला नहीं है, relatively नहीं चला है.
So generally I keep this towards the end of the conversation is what is the market view, but since we are talking markets, what else, you know, DSP as a fund house is thinking about? Because I think, again, to quote his tweets, you're talking very aggressively about why to diversify into, let's say, debt or gold, or get outside of equity, have a balanced portfolio. So you want to elaborate
सिंपल
on
है.
that?
मार्केट व्यू तो नहीं पता है मुझे, बिकॉज 26 साल में जब मैंने कोई मार्केट व्यू लेने की अपने लिए कोशिश की है, जनरली 50% ऑफ टाइम्स इट इज़ राइट, 50% ऑफ टाइम्स इट्स रॉन्ग,
Yeah.
बिकॉज मार्केट हैज़ अ माइंड ऑफ इट्स ओन एंड इन द शॉर्ट टर्म मूव्स आर रैंडम.
Yeah.
सो वो एस्ट्रोलॉजाइज करके वो खुद का एक डिल्यूजन है. हम खुद को बहलाते हैं कि हमें पता है, बट ऐसा नहीं होता है. दूसरा, लेकिन मैथमेटिकली अगर हम देखें कि जब लॉन्ग टर्म डेटा क्या है हमारा, कि अपना पूरे कंपनीज जो इंडिया में है, बड़ी बड़ी कंपनीज या टॉप 500 कंपनीज, इनका प्रॉफिट ग्रोथ रेट अराउंड 12 से 14% का है, होता है लंबे समय पे. इनका ROE 15-16% होता है. तो इनको फेयर वैल्यूएशन अगर देखें तो 16-17 का पी मिलना चाहिए. फिलहाल हमारा पूरा मार्केट 20 से 24 के रेंज में है फॉर सिमिलर अर्निंग्स मैट्रिक्स. एंड पिछले 2 क्वार्टर से रेवेन्यू ग्रोथ स्लो हो रहा है. एट सम पॉइंट प्रॉफिटेबिलिटी का इम्पैक्ट दिखेगा. तो नॉर्मल प्रॉफिटेबिलिटी और नॉर्मल रेवेन्यू ग्रोथ के लिए एबनॉर्मल पी जब होता है तो जनरली यूज़ कर रहा हूँ वर्ड, फ्यूचर 3 to 5 year returns are very close to fixed income returns. Or let me make a slightly extreme statement that in similar setups, generally in the past 80-90% of times what we have seen is equity gives bond-like returns with equity-like fluctuations. In that construct, it is sensible to add some seat belt or helmet to your portfolio, because if broadly returns are likely to be closer to each other, then better to...
Then why take volatility?
Yeah. Now, those investors who actually don't get impacted with volatility at all, and there are very few like that, for them all this doesn't matter. Asset allocation, rebalancing, you know, you can live through 20% down cycle, correction, and again markets will come back, then ignore all this. But most human beings don't like fluctuations or don't have the temperament to live through fluctuations. And that's where asset allocation becomes important. So our view is that markets are slightly frothy, and hence have defense in your portfolio. First level of defense, if you don't want to change the asset class, is go closer to large caps. Within that, banking segment has, you know, become closer to its fair value, so have larger weights there. Second level of defense is move out of the asset class and go to a more conservative asset class, or add that to your portfolio, which is global stocks. There are many global stocks today which are in their own down cycle. They have similar or better ROE profile than Indian companies. They are already going through slow growth, and the market has punished them. So today they are available at valuations where that slow growth is already discounted, and they are like world-class global businesses, not available. So this is an opportunity to add them. The third way of diversifying is add bonds, and the fourth way of diversifying is adding precious metals. They have a different demand-supply equation, not easy to understand sometimes because they don't have cash flows. But generally we have seen that gold has massively opposite correlation to equities. Though in the last year it has not worked. Last year both have gone up 25%. But over a very long period of time, gold and equity have moved in opposite direction, yet giving very similar long-term returns. So when you diversify your portfolio, you are not compromising on returns, but significantly able to bring down the fluctuation. And I think where we are poised right now from a market valuations perspective, we feel comfortable diversifying. The disclaimer here is 6 months back also we felt markets are expensive. 1 year back also we felt so, and we have been wrong. So whatever I'm saying, take it with a pinch of salt.
So that's fine. As I don't remember now who said this, but markets can remain irrational longer than you can remain solvent. So that disclaimer is true for all of us. But the interesting part about what you just mentioned about asset allocation is now with the advent of multi-asset allocation funds, actually an investor doesn't need to do anything, right? So the fund manager will kind of work for you and take care of all this, whether precious metals mein jana hai ki kidhar jana hai, all of that will be taken care of. In fact, I was talking to Mr. Gop Kumar, CEO of Axis AMC, just last couple of weeks back, and I think the simple innovations that mutual fund industry has done, actually they are much better than some of the complicated innovations possibly some other industries would have done. So for example, balanced advantage fund,
Yes.
right? A beautiful product, right?
Absolutely.
Having a balance between equity and debt. SIP, I don't think a better invention has happened in
in the
entire
world.
capital markets, which is for a normal retail investor, timing का झंझट खत्म कि कब timing करना है, छोटा amount बड़ा amount का झंझट खत्म, even 100 rupees you have, you can start an SIP, and which has brought so many new investors to the market. Today only I was reading some report, the share of individual investors in overall mutual fund AUM, it has grown by more than 50% or something over the last 10 years. This is because of these simple innovations,
True.
isn't it?
Yes.
So, I mean, the tendency of us finance people to create complex things just to appear smart, it actually doesn't work. You create simple solutions, it will work. People will like it, and it works for the investors, it works for the fund houses and distributors, everyone, right?
Yeah.
Isn't it?
I agree. Simplicity is the most difficult thing to execute. And you're right that, of course, see that there are challenges where we always like something new. We like a new mobile. कल iPhone 16 launch हुआ है, जिसके बाद iPhone 15 है, उसको भी शायद interest होता है लेने के लिए. So rarely is innovation significantly value accretive, especially in finance. In finance, the more backward we are, I think, the safer for the investor. A simple index fund, a simple disciplined long-term portfolio. I have learned, it took me 10-12 years to learn. There was always this craze in my first decade when we also exchanged our paths, was to chase 5-star funds. Was to be enamored by 5-star managers. But then I learned that everything is temporary. But what can be permanent is a 5-star process as an investor. कहीं पे, I think I read something that Nick Murray has written. He's a coach, he's a behavioral coach to a lot of advisors. And he had said कि आप 5-star funds को मत ढूंढिए. आप खुद 5-star investor बनिए. And what is the formula of 5-star investor? Is a very disciplined, simple process. And what is that simple process? We just need to diversify time so that volatility can be made a friend. Because what is volatility? Rising markets and falling markets. So when NAVs are falling, if you're doing an SIP, you're adding more units. So that's the first formula of discipline. And the second formula of discipline is diversify across asset classes. When one asset class doesn't do well, the other will do well. Now, it is our good fortune that we are in a country where long-term returns of equity are meaningfully higher than fixed income, are meaningfully higher than inflation. 5 से 6% का extra return हमको inflation और bonds पे मिला है पिछले 20 सालों में. In most countries in the world, equities do not give this type of alpha or this type of outperformance. Now, which has also taken us to a level of some amount of overvaluation. And hence, if we just focus on these two simple concepts of time diversification through SIP, anyways, most of us are salaried employees. तो हमारा cash flow तो महीने महीने आने वाला है, तो SIP help करता है. And at extremes, do asset allocation. At extreme low cycles, ignore asset allocation. So I always say that गाड़ी खरीदनी है, तो we don't buy a car which has 2 accelerators. We also need a brake. तो portfolio में तेजी में हमें ऐसा portfolio बनाना है जिसमें थोड़े brakes embedded हो, so that in volatile times we don't create an accident. बुल मार्केट में मोस्टली रिस्क मैनेजमेंट को हम भूल जाते हैं, रिटर्न्स पे ज़्यादा ध्यान होता है. सवाल होता है कि पैसा कितना ज़्यादा बनेगा. हमने देखा है कि जब हर 5-6 साल में ख़राब टाइम आता है, 3-4 साल का रिटर्न्स स्लो हो जाता है, तब हम ये सवाल पूछते हैं, तब सवाल चेंज हो जाता है. तब सवाल ये होता है कि रिस्क कहाँ है. तो उल्टा करने की ज़रूरत है. जब एवरीथिंग इज़ फाइन, वी हैव टू आस्क दिस टू शैल पास. When everything is not fine, we have to again remember this too shall pass and accordingly execute.
Yeah. So I forgot to mention, Kalpen and I have worked together for almost like 4 years when we were together at Birla Mutual Fund. Then our paths diverged. So you've been with DSP for how many years now?
7.5.
7 years. When investors are thinking about DSP as a brand, what image would you want to project to the investors? When investors are thinking about DSP's funds, what should investors be thinking about?
So as a brand, something that inspires me a lot is ये game compounding का है, right? Wealth creation is about multi-decadal investing, and if you are invested for decades, is when you can make immense wealth. So we are in an era right now where average holding periods are 3-4 years, but collectively all of us are making this effort of telling investors कि आप 10, 20, 30, 40 साल के लिए इन्वेस्ट कीजिए. तो ये मैसेजिंग किस कॉन्टेक्स्ट में जब मैं DSP के बारे में सोचता हूँ, so the thought that comes to me and what I want to convey is that the group is 168 years old. 17 decades of existence. Financial services में इंडिया में कोई नहीं है. So this is the oldest financial services group in the country. Within that, DSP Mutual Fund is an entity which has completed now around 28 years.
Okay.
We are in our 28th year, which is coinciding with exactly the market cycle and the fund industry of India. Fund industry started professionalizing in 97, 98.
Okay.
So as a fund house also, we have broadly been there right from day one of the inception of the industry. And in these 28 years, we have learnt a lot. We have seen many cycles. We have had glorious years. We have had difficult years. We have made mistakes. We have created joy for our investors. We have also at times disappointed investors, and we've learned from our experiences. And every year we keep on improvising. One thing I want all of you to know, and this is something very interesting and unique, is we have a rule that every employee of DSP will invest his or her money only in our funds.
Oh, is it?
We do not invest in stocks. We do not invest in the asset class directly. बिकॉज जब हम आप सबको बोलते हैं कि आप हमारे फंड्स में या म्यूचुअल फंड में पैसा डालिए, या हम बोलते हैं कि म्यूचुअल फंड सही है और हम जाके फिर किसी और के फंड में या स्टॉक्स खरीद लेंगे, तो वो ऑथेंटिक नहीं है. So we want to stand with
so
you.
There's skin in the game.
We hope. Now, of course, it doesn't guarantee necessarily the best returns always,
No,
but
obviously not.
the intent is that we'll feel the pain of our bad execution more than you, because you can get out and go to 20 other guys in the market. So we are fully in. We are a family-owned, professionally run company. So there are very few businesses in this industry, in the fund industry, which are owned by a family which has been there for 15, 20, 17 decades and has a very long runway. And the family also has 95% of its own capital, wealth, in our mutual funds. So you can argue कि मेरे पूरी wealth भी लगा लो तो I'm an employee like you, it's not going to be big. But when the owners also eat the same food, I think that's one point I want to convey. That, in all honesty, I say, is not necessarily going to give an outcome of highest returns always. So the second thing that we try to focus on is line and length. Manage money with sound principles. Take more risk when prices are falling. Reduce risk when prices are rising irrationally. That is a simple, conservative approach that we have. And we launch funds only and only if we think we can invest in those funds.
Okay.
So that's one very important test for us to decide whether we should launch a fund or not.
I'll just pick on something you just mentioned, which is at extremes, cut risk or add risk. Right? Now there will be times where in the short term again, your hypothesis will be tested. Like you just said that you've been, I mean calling it wrong is maybe extreme, but let's say you were thinking that markets are too expensive and you were cautious, and it was 1 year back, 6 months back, and today also you're making the same statement. Now in the short term, obviously you have to take some pain, right?
Yes.
Because there is some other fund manager who has this view that markets are not so expensive, or the flows will take care of valuations, right? and their funds will do well, they will get more flows, etc. The entire virtuous cycle which happens. How do you as a fund house, that digestion of that pain, how is that process internal? Because it's very important for people to understand that if you have conviction and you stay with the conviction, it's not easy, because at times your conviction will be tested, right?
So actually, sometimes these pain points happen only at extremes for few quarters here and there. But in the middle, it's not that challenging, and which is something that, see, this is, we manage other people's money, right? It's a fiduciary responsibility. So the starting point always, and these are debates we do every day, that, are we being arrogant? That this is my view, but the market is thinking differently. And there are times, most often the market is right. Collective wisdom of market most often is right. But at extremes, the market wisdom becomes market's folly, and people take, people misbehave. So you go back to sound principles. So generally, what are sound principles? That every asset class has boundary conditions. Every asset class for a certain amount of growth rate should be valued at a certain price. So now you know that, okay, if the price of this asset class should be 100, there is a huge flow cycle. Prices have gone to 120, the flow cycle will support. Maybe we gradually reduce our weights and not binary take those calls. So that's how we try to fine tune some of these extra dimensions. But the core still remains that 100 ka maal agar 150 pe gaya hai, and we are still putting our money or your money, we are taking a lot of undue risk on faith then. So it's okay to, slow down when the lane is getting crowded. It is natural, right? That's what we do in driving. So we are applying the same principle. No doubt it is painful, but वो pain लेने के लिए तो आप हमको management fee दे रहे हो. So there are gains also when over a period of time we go right and create value for you and our investors together. That's exactly what our jobs are. And I think it's not just DSP. I think most people in the industry, thankfully the fund industry comprises of good talent and good intent together. We are all talking the same language. I don't think anyone is talking a different language of discipline, asset allocation. And even today, what we say is that if you are a 20-year investor, do nothing about market valuations. These are temporary phases. Only new investors who are coming in, looking at past returns, need to be conscious that
you cannot extrapolate
the last 5-year returns of 25%. Long-term returns are 12 to 14%. And in the near term, there are periods of zero returns. We also highlight rolling worst case returns on our web pages. That our worst annual return in this product has been minus 67. It may have happened once in 25 years, but you should be aware.
No, and I'll maybe kind of speak about what you just mentioned in a different parlance. Sachin has 100 hundreds, right? But career average is less than 50.
Yes.
So even Sachin will not have 100 in
every
each match. So you have to look at, we call him a great batsman. Obviously there are 100 hundreds, but his career average is, let's say, 48 or 50, which is awesome, beyond awesome, right? But even Sachin will have zeros.
Absolutely.
So it is folly for investors or folly for fund managers to think that in each year or each quarter or each market cycle, they will definitely crack the yehi best stock hai aur I had an overweight position in that stock. So this I completely agree, and it's so important for investors to have their expectations right. See, again, pain market के performance से ज़्यादा अपनी expectations की वजह से आता है.
True.
Because I entered into equity thinking कि my friend who had entered last year has made 30%, 40%, 50%, then I should also make 50%. It doesn't happen that way.
True.
Your friend, so there are points of entry and which stock, which fund, and there are so many variables which are there. But let's say your friend had entered last year and you have entered this year. If both of you stay invested for the next 20 years, more or less your returns will be similar, isn't it?
Absolutely. So time normalizes.
Time normalizes many things. And if we do believe that our country has a great economic future due to demographics, young population, etc., then long-term equity returns will tend to be, if our real GDP growth is 6-7%, 4-5% inflation.
I'll give you a personal example, and like most of the viewers, I'm a common man, who has been a professional working for last 26 years now. So thankfully, I started my career in the fund industry. So day one से पता था कि पैसा काम पे लगा दो पहले दिन से and let it compound. And the principles of the concept that time is the most important variable. For compounding के formula में time के आगे exponential sign है और return के आगे plus की sign है. तो प्लस और एक्सपोनेंशियल के बीच में एक्सपोनेंशियल के पास बहुत ज़्यादा पावर है, तो
बहुत
टाइम इंपॉर्टेंट ये पता है ना. उसका मैनिफेस्टेशन आई टेल यू टुडे वंस इन अ वाइल व्हेन आई इन द नाइट ओपन माय ऐप एंड सी हाउ मच इज the portfolio value, positive or negative. So there are days when markets are down. The value of the portfolio is down in a single day as much as what would have been the total portfolio over 10 years in my first 10 years of life. Because the portfolio over time has grown and compounded. Or on some days when markets are up 2-3%, the absolute gains are as good as what I would have invested in the first 10 years. Now, when I think about this, this looks very unreal. कि एक ही दिन में पोर्टफोलियो का वैल्यू इतना मूव हो रहा है जो 10 साल लगे थे पहले इकट्ठा करने में, और तब तो लगता था कि ये पॉसिबल ही नहीं है, दिस इज अनसरमाउंटेबल. बट विथ टाइम, ऑल दिस टाइम एंड मंथली सेविंग, saving rate has to be very high. So a lot of people who are experts in personal finance, they say that मार्केट को जो रिटर्न देना है देगा, वो पता नहीं चलेगा, वो तो फ्यूचर में पता चलेगा. आप कितना हर साल सेव कर सकते हो वो बहुत इंपॉर्टेंट है. इज योर सेविंग रेट हायर देन द रेट ऑफ रिटर्न ऑफ द मार्केट. आई थिंक आई वॉज वेरी ब्लेस्ड टू बी इन द फंड इंडस्ट्री वेयर राइट फ्रॉम डे वन दीज प्रिंसिपल्स वर वेरी क्लियर. सो द की वेरिएबल इज सेविंग रेट क्या है, टाइम होराइजन क्या है, और पोर्टफोलियो में एट एक्सट्रीम गलत रिस्क नहीं लेना है. एट एक्सट्रीम जाके अभी अगर कोई सेक्टोरल फंड खरीद लिया जिसका पिछले 5 साल का रिटर्न बहुत ज़्यादा है, एंड देन दैट फॉल्स बाय 50% एंड आई हैव परमानेंट लॉस ऑफ कैपिटल, दैट्स अ बैड डिसीजन. But temporary fluctuations and all, part of life, asset allocation and SIP both will solve for it.
I think we were, before we started the camera, we were talking off camera on this precise point that investors have kind of understood that diversification of their savings, which let's say maybe again 15 years back, fixed deposit possibly would have been the the first or preferred asset. Now they have understood that okay, mutual funds have their way. So हाँ, 1-2 साल खराब होंगे, शायद हो सकता है returns कम ज़्यादा हो सकते हैं, but there's a huge tailwind which is there. See, we keep on discussing this internally, that the maths is very simple, right? We are at, let's say, anywhere between $2,500 to $2,700 per capita income, right? Our economy will grow anywhere between 12 to 13% nominal, 6 to 7% real, 5-6% inflation, 12-13% nominal the economy will grow. Population is growing by 1 to 1.5%. In fact, India has done a commendable job in arresting its population growth. I was reading some report, actually we are below our replacement rate now. We are below 2.1 childs per couple, which means that
per capita
GDP will grow very fast. And whenever this happens, it's not just it's going to happen only in India, it has happened in Korea, Japan, US, Europe, all these countries. The excess over what you need for sustenance, which is roti kapda makan,
is high.
It will either go in investments or it will go in conspicuous consumption. For example, let's say if you talk about in India today, right? When I started my career and I was an analyst working along with you, whenever we used to make projections of a car company, always hatchbacks will sell well. सबसे पहले मारुति 800 ले लो, फिर ऑल्टो ले लो, फिर स्विफ्ट ले लो, एंड फिर कोई गाड़ी का नंबर आएगा तो आएगा. बट नाउ SUVs are
starting point is
SUVs are selling better than hatchbacks. So all of this is a manifestation of the country's ability to earn that extra over roti kapda and makan. So it is going in buying iPhones, as you said, is going in buying SUVs, it is going in mutual fund investments. And this is a mega trend. It's not going to unwind unless we do something really bad as a country, as an economy, which rarely happens, because again these are mega trends. The kind of demographics we have, the kind of young population we have, no country has. In fact, in the West there is an aging problem which is there, right? So they have to net import people. We have the ability to net export people, whether through services or actual relocation of people. So this trend is not going to change. Again, the train is going in the right direction. We should not make a mistake of not being on the train. Whether to be in the AC compartment or whether to be in some other compartment is a choice we can make depending on whether we are feeling cold or hot. But the big call is that we should be on the train.
So that, I think, is a very first principle, that you can compound your money or increase. See, ultimately, why should we invest? If I have to answer that question, if we don't invest, every year 6 to 10% is eaten away in inflation. Forget the RBI numbers and all. Real inflation to 12-15% hai. Cost of education, cost of healthcare, all of that. So if we do nothing, our capital is getting depleted. Now, the only way you can beat prices is to own companies which are beneficiary of price hikes.
Yeah.
तो वो तो धंधे का पार्टनरशिप करने से होने वाला है, and the best way to do that is ownership of companies. So either you run your own business, but 99% businesses don't succeed, and the ones who succeed are already in the stock market. So then partner with them. What is a cost efficient way of partnering? Mutual fund. What is a tax efficient way? Mutual fund. What is a transparent way? Mutual fund. What is a safer way? Thanks to the tightening of regulations over the last decade or so, this has been one of the most credible vehicle for allowing partnership with businesses. And the other beauty about mutual fund, which is less spoken about, see, in this hype about India, many times we don't speak, but today we a lot of us were waiting all night to see Apple का launch. आपको Apple के stock में खरीदना है, वो भी mutual fund दे देगा. Lot of us, send Warren Buffett quotes very loosely. We don't think about investing in his company. His company in 25 years has earned 3% more than Nifty, with a 15-16% cash position always. Berkshire Hathaway. You want to invest in Berkshire, mutual fund allows you to do that. Probably Berkshire stock is, I think, a single stock का price is 6 crore rupees. जो original A share है. It is some $5 lakh or something. So the price of a share is 6 crores. You can't buy, right?
But in 500 rupees,
in 500 rupees, in 100 rupees in my value fund, you can get 7% exposure to Berkshire. So the vehicle allows you to own businesses anywhere in the world. It allows you to own commodities if you want. It allows you to own bonds if you want. It allows you to own American bonds if you want. So today, if we believe that US yields have risen to 4.5-5%, now they've come down, and they're likely to come down for the next 2-3 years, and you want that exposure, a multi-asset fund or a global debt fund also will allow. So, of course, you can pick and choose as per your need and portfolio size, but the vehicle allows you to do a lot. Ownership is important. Being in the train is important. And if you choose the right train at the right time, and what is important is that you choose a train in the direction in which you want to go, not in the direction opposite to the train. That is otherwise accidents can happen. Last point, there is always, the only way you can get in a train is when the train is stopping. Unfortunately, in markets, people like to get into the fastest moving train. In markets, most behavior of investors is to see which fund is running fastest, and I want to jump in there. And it naturally is prone to accidents.
Okay, great. So we are at time. So one just last parting question. Can I ask about your personal finances?
Of course, yes.
Okay. So when you are deciding about your own personal asset allocation, right? I understand that if you have to invest, you will invest in DSP's funds, right? But how do you think about your own personal asset allocation? So I'm sure there will be a home and the surplus after home, the investable surplus.
So see, I have worked in 4 asset management companies, thankfully with the best companies of India. And all my money is in these 4 funds. So wherever I worked, incrementally all money goes into that fund. Thankfully, all of them have done well. So I've been happy to have save and invest only through mutual funds. 98% of my portfolio is in mutual funds. 2% will be sovereign gold bonds, 2 or 3. I have a simple rule: at higher valuations, asset allocation funds incrementally in my portfolio. At lower valuations, 100% equity funds incrementally, whatever I do.
But what is there that you don't touch?
Largely I don't touch, except at extreme points. So if let's say valuations cross 25-30 times, closer to that number, then I would think of rebalancing. I'll start thinking of rebalancing. If in that particular quarter I have some expense coming up,
you'll sell equity funds?
I will sell that and then use that. Now normally the size of the portfolio is large enough that, and expenses are generally not large. So the only big expense I've had in my 26-year career is when I bought a house in Mumbai, and that too I bought only 2 years back. Because the logic was very simple that Mumbai is the most expensive real estate market probably in the world for the choice of quality that you get. So price divided by quality is the highest. Price itself is amongst the top 10 in the world. And rental yields are 2%. Bond yields were 8%. ROE of equity is 16%. तो 16% asset छोड़ के 2% में डालने का कोई
this is a problem. Somebody who is working in finance can never buy a house.
It is a challenge. You're right. But then COVID taught a lesson because in COVID we were always at home. So वो हर Zoom call पे मुझे जब पीछे का wall दिख रहा था मेरा, and then I realized अरे ये तो खराब है.
Change करना चाहिए.
Change करने का time है. But rented house था. And then COVID के बाद markets went up one way, 100-150%. Small and mid caps rose sharply. So I used that opportunity to rebalance. That equity से थोड़ा कम करके buy a house. I did not take a loan. In hindsight,
you could have stayed in a rented house.
no, or maybe in hindsight I should have taken a loan and let the equity continue to rise. But at least I didn't have to worry ki what if markets fall, what if and interest rates have risen since then, loan rates have risen. I don't like leverage. So that's my personal bias.
No, so that's what we are talking, that you should know what is your temperature,
Absolutely.
right? The outside temperature will be what it will be.
So my portfolio today is, like I said, 99% mutual funds, barring some sovereign gold bonds. My demat account, I don't know how to operate it. Since 2008, I have stopped. Because one line I read in Ben Graham's book that if you cannot understand or if you don't spend time reading about a business and then you buy the stock, you're speculating, you're not investing. Secondly, from a compliance perspective, it's not easy to do. So mutual fund is good for me. In this, if I assume this 98 rupees is my 100 rupees, around 45 rupees is in funds investing in Indian companies. 15 to 20 rupees is in funds investing in global companies. And around 25 rupees is in funds investing in government bonds or long bonds. And around 10 rupees, 5 to 10 rupees is in 10 rupees is in gold bonds and gold mining. It's a very broad-based.
It's a very balanced portfolio.
Balance is a nice way of saying.
No,
someone has told me that it's a very confused portfolio. It doesn't stand for anything, but which is fine. I don't want to right now stand for. My view is I don't want to take downsides because see, a lot of our decision making is shaped by our own experiences, and they are also biases. They may harm your returns. So let me tell you that effectively my portfolio is a 65-35 portfolio. So obviously it will underperform a 100% equity portfolio. And in the last 1 year, it has underperformed an equity portfolio. Now, do I need liquidity? Do I need cash? Why should I be in 35% in bonds and gold? Actually, I should not. But it is my comfort zone because I started my career in 99-2000 and I have seen a 80% drop in market levels in 2000. Those fears have made me a conservative investor. Had I started my career at the low of 2000, maybe my portfolio would have looked different. So there's no right portfolio answer. It is a personal choice. Generally, with everyone else's experience, what I've seen is that if you have a 20-30 year view, and if the country is like India or US, democratic country, respects profitability, and businesses are capital efficient, and businesses reward shareholders, you will be better off being more in equity. None of this could have worked if you were sitting in maybe today a Japan or a China or many European countries. Then the same principles would not have given same outcomes. So many times I wonder that buy and forget forever. Would it have worked in China? In hindsight, no. Would it have worked in Turkey? Would it have worked in many parts?
Japan 30 is zero returns.
Of course, that starting point was wrong. Starting point was 100p or 70-80p. So there are many nuances. With every passing year, the learning for me is that what was a hard-coded belief, not all of them work always. They work at a point in time, and some beliefs you have to, with new learnings and experiences, be flexible and operate with data. But simplifying my last point is be a long-term investor and be a collector of units. I feel comfortable when prices are falling. When CNBC pe, it is red.
You get more units.
I feel excited because I'm still a collector of units because every month I'm buying. I'm still in collection mode. For my father and mother who are not in collection mode anymore because they don't have new income, they are retired. They are not happy with that. So again, it's the context because they are in redeeming mode because of healthcare needs, expense needs, and so on and so forth. So everything is context, and then depending on where you are as an individual, you have to define and design your portfolio.
Okay, great. On that happy note, very nice to meet you.
Thank you once again.
Hope your new fund succeeds well.
Depends also on you.
Let's see.
Thank you.